Hello friends, this is your friend CryptoSats. Hope you all are doing well. So in this video I'm gonna teach you how do I mark my support and resistance, and what the three tips I wanna give you, three things which I determine the support and resistance. So hope you guys will like this video and you get some knowledge out of it. So this is my perspective of how I draw the support and resistance in the market, in any pairs, in any market. So watch the video till the end. If you like the video, please like and subscribe to the YouTube channel. So let's go. So first way I determine my support and resistance is the consolidations. So as you know, as like everyone might know this, consolidations where the market consolidates, that tend to be a strong support or resistance. For an example, I will show you. So here the market consolidated, as you can see. This is where the market consolidated, and this tend to be a strong support and resistance. This is how you mark a support and resistance. Where you see consolidation, mark the top or the bottom and you see which works the support or resistance. For instance, here there was a nice the trend was up, before the move was up, and then we just consolidated here, that is reaccumulated. So this resistance on the top works as support. For again another example, here you can see, so this top, it gave a support, then we broke that support again and we retested it. And so this is how you mark a key level support or resistance. So as you can see, we broke out this one, we retested it, and again we just went down again. Here you can see how key this consolidation stops and bottoms work well. So here we had a consolidation. See how for how long the market just respected that support or resistance. For instance, you can see here we were consolidating here and we initially broke down here, then again we found it as a support. See how key that level worked as. So this is how I mark my consolidations as my support. For example, another example, you can see it here. This was the consolidation. So you can see clearly that the market was strongly trending over here and suddenly it just got stuck here. That is, it is consolidating here. It consolidated here. So once it broke out, so that tend to be working as a support in future, right? So you can see it here, that's what happened. The market just worked as a strong support and it just punched back. Again, if you see here, we see a resistance. Here the market was consolidating here again. We had a strong impulse move up. Here the market again got stuck. Again it was consolidating, it's tapping over this supply zone again and again. So finally it broke out. So now this should work as a support. It should work as a significant support. So at retest would be a good entry in this case. So you can see something like this. So this is one way of marking a support and resistance. This works very well for intradays, for higher time frames. You can just play out with this one. So instead of just drawing this single lines like going here and there, so if you're a swing trader, you don't need to have an exact damn accurate support or resistance. You just need to have a zone. So that's how you determine your support and resistance, and this way you will rule out the confusions you ever have in this market of in terms of drawing support and resistance. Okay, I'll take a quick summary on this one. So first way of drawing a support and resistance is a consolidation top or the bottom. So you can see clearly this was the consolidation top, and you see how key that level played. Again you can see it here, it was a perfect SR flip. It was consolidating here, the market was just banging this supply zone again and again. It broke out again, retested it as support. That's a classic example of support and resistance flip. And then again we broke out, again we came to this consolidation, we tested at support, again we broke out. So again this resistance will act as a support now, and again we will break it out. Or if we consolidate here, so let's see what's the price action would come in future. So as of now this would act as a support, and from here the market should bounce back. So this is one way of marking your support and resistance. And the other one, which many people were asking me how to draw an order block, for this I'll go for 4-hour time frame. So what is an order block? So an order block is, just listen to it carefully, last candle in the opposite direction of an impulse move. So it's a last candle in the opposite direction of the preceding impulse move. For an instance, I'll show you some examples on how to see an order block. So example, let me find it for you. So I'll show you some couple of examples. So one way is, you can see it here, this was the last candle in the opposite direction of the impulse move. This was the impulse move down, and this was the last candle in the opposite direction. So I'll just show you some in illustration. So consider the market is moving like this, and you got a last candle to the downside followed by impulse move to the upside. So this candle becomes your order block. So that consolidation, if you go on smaller time frame, that would be in consolidation because that's an opposite candle. So that becomes an order block for you. So I'll just show you a live example here. So as you can see, this was the last candle. I'll just mark that line for that candle for you. I'll just highlight that candle. So this one over here, this green candle over here. So take this, just measure your body. So this candle this is an order block, and this tend to be work as a strong support or resistances depending on where the price action is. If it's above the price action, that should work as a support. If it's below the price action, that should work as resistance. Here in this case, it worked as strong support. As you can see, the market broke and it gave a strong support, strong demand zone where you can place your buy orders and see how the market pushed itself. So this is how an order block works, and I'll show you some other example. Yeah, here you can see it here. This is not a perfect example, but I just started filming it. So as you can see, this was the last candle in the opposite direction of an impulse move. So this was an impulse move. There was a rally. Before that was the last opposite direction candle, and you just mark the body of that. I personally ignore the wicks, so I don't care of the wicks. But the bigger the body is, the stronger the order block is. For example, for instance, you can see here, the bigger the body. So this was a very good example of an order block. You can see how bigger the body is. So the bigger the body, the stronger the support or resistance tend to work for this order block. So again, here we have an order block, this candle over here. I'll just mark it for you again. This candle over here. So I just pay attention. I just mark the body of that candle. So if you see just see how strong that support worked. So the market came again, it just dipped into it, it just touched it, and from there it just broke out. So this is what an order block is. So let's see for some, this is how a support works. So let's see if I can find some resistance order block. So like this, I personally ignore this kind of order blocks because this is an order block, but see the body. So just have some practical ideas on this. So this body is very small, but it did work as a support and resistance. It is an order block, but I just tend to ignore that. It worked as a resistance and it worked again as a support. You can see it here. So I'll just see for some other example for you guys. Like here, this is an order block. This is an order block. I'll just mark that. This candle. So that gave support, but the market just broke down. And let's see some other couple of examples here you have a perfect example, a last candle in the opposite direction of an impulse move up. So this is an order block, see, where the market just reversed its downtrend. From here it started breaking down. From here again it found a support at this order block, because that was fresh and untested, there was no test of that. So yeah, one more tip I want to add, as fresh and as new the order block is, for example this was a new order block which was untested, there was no price over here, so that tend to work as a strong support or resistance. Hope you guys understand. So this is a fresh order block, we had no test on that, so that was a fresh. So see how the market just bounced out, it just bounced from that order block. From there it just went gave a significant rally from there. So hope you guys now understand how to mark an order block and how to see an order block. And one quick tip, always remember, the bigger the body is, the good and strong the order block is. The smaller the body and you have a large wicks both the side, so try to ignore those. I personally ignore those, there is no such rule, but I tend to ignore those. And yeah, one more thing, how do I use this tool? So I just go to the parallel channel, I take this, I go to settings, I just take off the channel, so this is on zero transparency, and I add this middle line, because this middle line in my experience tend to give a strong support and resistance. For instance, I'll show you an example on that. You can see it here, that middle line is working as resistance, so that tend to work good. This is not an super important, but yeah, in my experience adding these three lines, it gives you a better idea where to place your buy limit orders or sell orders. So I just spread out my sell orders or limit orders inside this parallel channel. So that's how I trade. So next one, so we have done with consolidation, support and resistance, we are done with order block, and I want to share you one tip, how to confluence your order block to make it stronger and make it a key thing. So there is one more way to add a confluence to your order block, is point of breakdown or point of breakout, POB. So remember that, point of breakdown or point of breakout. So I'll just clean this up. So here you can see there was a significant top formed over here. So there was a top formed here, and you can see this candle, this one over here. I'll just mark that candle for you guys. So this candle over here, that's a point of breakdown, because you can see here the market was just going it was just consolidating, like there was no clear price action, it was just chopping out, so it was a very choppy price action. So from here, after this candle, there was a clear point of breakdown. From here the market just crashed it, and it just dumped as hell. So that's what I call as point of breakdown. So and another instance, that's also a order block, because that was the last candle in the opposite direction of an impulse move. So that with confluence with the point of breakdown tend to work as strong support or resistance. So you can see, so see, this was the what I told, the middle line. So as you can see here, the exactly reacted to that 0.5 line here. So this is a point, this is a way of confluencing your order block with point of breakout or breakdown. The same way, the point of this was an example of point of breakdown, and this is an example of point of breakout. Here we have an order block at this candle. I'll just again mark for you guys, so you just be clear with what I am telling. Pay attention to this candle as my previous example. This was an perfect example of point of breakout and order block. As you can see here, the market was consolidating, so it was a choppy price action over here, and after this candle there was a clean breakout of the market. there was a clean breakout in the market. So from there the rally was significant and it went strong. So that's a point of breakout. This is a point of breakout and this is a point of breakdown. From here the market just broke down, and after this candle, this order block, the market just started a new rally. So that's a point of breakout. So confluence your order block with point of breakout or POBs and you will get an amazing result, which I have been using, and I have been testing this for a long time and I have been very successful with this one, this type of marking of the support and resistance. So hope you guys do the same and you too win in this market. And I'll just make a quick summary of what I told right now. So, and a quick summary to conclude this video, guys. So these are my 3 ways of marking as support and resistance. One is consolidation. Tops and bottoms tend to work as a strong support or resistance. For instance, you can see here the market was consolidating as support and here it tested as resistance. So this is one way of determining a support and resistance. The second one is order block. As I mentioned, an order block is a last candle in the opposite direction of impulse move. So this was the last candle of the opposite direction of an impulse move. And third one is point of breakout or point of breakdown, POBs. So this was the point of breakout after a consolidation where the market really starts breaking out or the breaking down. That confluencing with the order block tend to work as a very strong and support resistance. So these are the ways institutional traders, institutionals also use this kind of support and resistance. For instance, order block they use a lot. Institutions all use the order blocks a lot, you can see. And this is an order block, perfect example of order block. So these are the 3 ways of determining a support and resistance, guys. Hope you all like this video. Please give a like and motivate me to so that I can bring you more and more videos of this kind of videos. Hope you guys found value with this video. So thank you, have a nice day and all the best.